Good morning. Today's Friday, April 26th, and we are looking at the silver ETF trade, right? The symbol being SLV. All right, if you recall, we went long this market at right down here at a price of $22.35. We had three profit objectives. Now, remember, we were risking right below this low. We were risking only 49 cents. 49 cents is what we were risking on this trade. Our first profit objective was 22.84. Okay, 22.84. Okay, and the market, as you recall, yesterday gapped higher. Gapped above the first profit objective. Second profit objective, which hit yesterday morning, remember on the video, was 23.13. Let me write these out. 23.13. So right on the opening, it gapped up through the first profit objective of 22.84, right? Like right there. Okay, second one was 23.13, and the third one was 23.33. And we hit that yesterday as well, right up in here, 23.33. By the way, 23.33 is twice what we were risking of 49 cents. Okay, so the third profit objective at 23.33 was a 98-cent profit, which was twice as what we were initially risking. So that was a nice trade. I'm still long this market. Took profits off at each of the profit objectives. I'm still holding a little bit here. I've got a real tight stop. A real tight stop. My trailing stop, which is a sell stop right now, okay, is at 23.33. Okay, I'm only 9 cents below where we're currently at right now. Okay, I'm actually one tick below, 1 penny below today's low of 23.34. So, okay, so 23.33 is where I'm going to knock myself out of the remaining portion of the position in case this market were to stage a rally like we saw yesterday. Now, let me go into this trade a little further. Now, when I outline this trade for you, I'm not exactly sure if I gave you other reasons other than the market was testing this low here, right? That was put in place on the 15th and missed it by a few pennies. We went long above that high. The one thing that made me want to take this trade without a doubt was looking at the gold ETF. Now let's take a look at gold. Now this was the day, my trigger day on silver, okay? The 23rd was right here. Look at the 23rd on silver. The 23 on silver, right? April 23, right in here, was testing this low. And the market had been in a range for a while, doing nothing. Well, if you look at gold, during that same time period, gold had broken up. Right, gold had broken up right in here, and then pulled back. Gold, in what I've seen, typically leads silver a bit. So, looking at that move outside of this range after it really coiled up here. Remember, we took this trade last week. We were long right in here. We caught a bunch of this. I wish I was still long, and I wish I had utilized a trailing stop a little bit better, because I would still be long a portion of that position, which I'm not. So, looking at silver and seeing how silver was literally testing this low, okay, was at the bottom of this range, and gold had already broken up, made me even more excited to put on a position here in silver. So that's why I went long, and what do you know? The market popped up, and then we gapped higher, and we really rallied yesterday. So not a bad trade. Up 4% in just a couple days. Those are the trades that we're looking for. So again, the reason behind that silver trade more than anything else was seeing that gold had already started making a move higher, and silver seemed to be left in the dust. So I thought the next logical move for silver after looking at gold was to move to the upside. Okay, let me talk about another trade that I put on yesterday, and I'm sure there is time for you to enter this. But it's the VIX, VXX, the VIX. All right. Now remember, the VIX is is pretty much the opposite of the market. I mean, if the stock market goes down, the VIX usually goes higher. It's the fear index, right? So let's take a look at the E-mini S&Ps. Look at this. The market pretty much, that's one, okay, this is the low that we're looking at, right? Market came down, tried to test this low, bounced higher. Came down a second time, took it out marginally, and we bounced higher. But because the market was able to take this out a little bit, I'm thinking that the market probably will not punch up through this high with a whole lot of force, momentum. Therefore, in here, I bought the VIX, anticipating that it's going to move higher if this comes down. So again, I'm not risking a whole lot on this trade. If the market starts to close above this 1593 in the E-minis, then I would just exit the VIX trade here. So look at where we're sitting. Obviously, this has been trending down because the market's been up big time. So again, if we get some type of market correction, even 5%, this VIX is going to shoot up. And I would suspect it moving up to about 2254 and trying to test that area. We're at 1949 now. My average price on this trade, I'm looking at my account, it is $19.19. Okay? $19.19 is my average price. So I'm long the VXX at 19.19, and I'm looking for the market, the VIX, to rally up to here as the market comes down. But if I'm completely wrong, that's fine, right? I won't risk a whole lot. Let's take a look at this low. This low is 1831, right? That's not even a point away. If the VIX starts to close below the 1831 area, 1823, which is the lowest low, the 1823, then I'll exit this trade. So I'm not risking a whole lot of money on this trade. I'm just betting on the fact that the market's going to make some type of correction. Again, looking back at that daily chart on the E-mini S&Ps, okay? Again, putting a horizontal line on this high, I'm looking for, even if the market were to falter, and even if the market doesn't break down through these lows. Now again, I think this is a pretty big level. If the S&Ps, we start breaking down not only through these lows on an intraday basis, but we close below these numbers, I think we can go lower, and I think we'll get some type of correction. But we are in a strong market now, so I'm not. Look at that. I mean, look at where the market bounced. Right at the 38.2% retracement. We're coming back up to try to retest this high. And again, I'm just playing the VIX, the opposite. All right, hope that helps. Have a profitable day. Let's take a real quick look back at the silver trade. Well, look at the 23.52. We're starting to break up through the high of the day. What I'm really paying attention to, I know I'm kind of rambling, but hey, I love it. Yesterday's high was 23.56. 23.56. If the market can start breaking up through 23.56, I'll probably go ahead and look at 23.55. We're getting real close to that now. So if we can start breaking up through 23.56 to the upside, then I may take that stop and bring it up even further and lock in even more profits. Okay? Bye for now. Have a phenomenal weekend. Oh, one other thing I don't want to have you forget. Go to optionsmd.com. I know I've mentioned it the last couple of days, but this week, Doc Severson has been putting together a video series that I think you'll absolutely love. Optionsmd.com. Get your free video series that he's put together. The second one was released yesterday. The first one Tuesday. We've got a third special one this Saturday, tomorrow. So go to optionsmd.com. Have a great weekend. Bye for now.